Hello, everybody. Welcome back to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over here at ewotrader.com. And if you don't know what we do here each week, we talk about companies and their earnings. And we don't talk about what their estimates are or what the outlook is. We talk about how to make money from trading earnings each and every week. So as we walk into the month of December here in 2025, traders are gearing up for a fresh batch of data coming from retail, tech, and macroeconomic data that has already been trickling out because the government was closed. But now all that is starting to seep out. This week we have key earnings from companies like Salesforce, Snowflake, CrowdStrike, Dollar Tree, Dollar General, and a host of retail and banking stocks. We'll talk about some of those. And we'll go through the list and take a look at last week's trade and a trade from the previous week that we closed out last week and see how those did. And then I have a new offer for you, a new trade for you for this week, all coming up here on Earnings Call. So let's get it going. All right, each and every week we talk about a bunch of stocks. So be sure to use the chapter feature located on the bottom of the video. And we highlight really the best opportunities, not necessarily the most familiar names each and every week, although we do like to cover the big names and what their estimated moves are. But we trade two types of opportunities. One type is for quiet stocks that just don't move very much. And the other is for breakout stocks. Stocks are going to move double digits in and around earnings. They do it on a regular basis. So those are on the left-hand side of the sheet. On the right-hand side of the sheet are our quiet stocks. Those are stocks that the quiet ones are the ones that just move single digits. They'll move 3%, 5%, 8%, some single digit numbers versus the breakout stocks, which are double digits. We're talking 11, 12, 20, 30% sometimes on these stocks. So let's get down to our list. Let me show you an example of a quiet stock. That's where we'll start. This is a notorious quiet stock. This is Pfizer. And Pfizer is not only a quiet stock most all the time, but especially through earnings, which I have highlighted with an ellipse. You'll see here that it just really doesn't move much through earnings. We're talking maybe 1% or 2%, just very quiet. Now, Pfizer does not have earnings this week. This is just an example. So let's get to our list of who is featured this week. All right. And we do have a nice handful of stocks, a nice selection here. Nothing going on today on Monday and nothing going on Friday. So really the concentration is Tuesday, Wednesday, and Thursday. So let's get to our list. We're going to start here with Scotiabank. All right. Also called the Bank of Nova Scotia, but it also goes by the name Scotiabank. They will declare earnings tomorrow on December 2nd before market open. So first thing in the morning. The average move here is about 5%. Now, one thing to note about Scotiabank, this used to be a notorious quiet stock, moving only 3 to 4%. Volatility has picked up here recently. The last two earnings cycles, the stock has moved, I believe, 6%. And then this back here in August, that was a 7% move. So overall, the average move here is around 5%, but volatility is picking up a little bit. Now, with these types of stocks, the quiet ones, we like to sell premium going into the earnings announcement, meaning we like to sell options because the implied volatility level has increased, making them more expensive. And really, doing it on stocks that are priced $50 and higher is the norm, especially $100 and higher. We do trade occasionally a $20 or $30 stock, but that's on the rare side. Usually these are higher price stocks. So Scotiabank does fit into that model, being here right around $70. So they will declare first thing tomorrow morning. And then here's an example of one of those big dollar stocks. CrowdStrike, it's a $500 stock. This stock has an average move of about 7% through earnings. and it is forming actually a nice little triangle here. You would think it might break out, but earnings, this back here, this big move in September, that was not earnings. Okay. Earnings was back here. And it just, you see this whipsaw action here. Stock gaps down on open, rallies higher. The next day, it gaps higher, rallies lower, or, sells off. And it just chops around in a little range. And that's what normally happens with CrowdStrike. All right. So great stock. $500. There are plenty of options to look at here. And we will look forward to seeing what they do tomorrow, December 2nd, after market close. And again, the average move here is about 7%. And that's what we're expecting going into their earnings tomorrow. Now, another Canadian bank, the Royal Bank of Canada, both have rallied nicely. Both are rallying, Scotiabank and Royal Bank of Canada, both are moving from the lower left to the upper right of the chart. But we're not really concerned with the overall trend of the stock. We focus on just the earnings announcement. Now, this is a $150 stock. This is ideal for selling premium. We do it with a strategy called an Iron Condor. Okay, you sell a call spread on top, you sell a put spread on the bottom. Combine those together, and that makes the Iron Condor. They will declare on Wednesday, okay, December 3rd, before market open. So out on Wednesday, the average move here is about 4%, plus or minus, about 4%. That's what option market makers are pricing into this right now. So definitely one we will be looking at going into the earnings on Wednesday. Moving on through our list, we have Salesforce, another familiar name here. They will declare earnings on Wednesday, December 3rd, after market close. All right. The average move here is about 8%. So we do expect the stock to gap a little bit, but it's not going to move big double digits. At least that's what the option market makers are pricing in to this stock going into earnings. Okay. The trend is a little bit down. Okay. You can see the stock after a recent high back in May here of almost $300. The stock has been declining. We're not really concerned with the overall trend, although you might expect a down day after earnings, depending on not only did they hit their numbers, did they miss their numbers, but what is the outlook from the CEO during the earnings call? That's the critical thing. All right. Moving on through the list, we go to Kroger. Kroger will declare on Thursday, December 4th, before market open. Several of these doing early morning announcements. The average move here for Kroger is about 5%. $67 stock. We should be able to do a nice Iron Condor here on this. This is a very large grocer, and very, these companies take a huge surprise to really move the stock. So given that this only moves about 5%, it could set up very nicely for us. The problem is when it's really consistent about its earnings announcements, that gets priced into the options, and the opportunities start to dry up because there's no edge left. Okay. If the outlook is 5% and the stock moves 5%, then it makes it very risky whether or not our trade would be profitable or not. Okay. Same thing on the breakout stocks, which we'll talk about here in just a moment. Okay. Continuing on the list, just two more stocks here. We have Dollar General. Now, this is a really nice stock to trade. Volatility has picked up a little bit here recently, but they will declare on Thursday, December 4th in the morning before market open. The average move here is about 7%. Okay, so that's going to move about $7, $6.50 to $7 on average. That's what's being priced in right now. We'll see if that gets adjusted going into as the whisper numbers come out. All right. And people start bidding up price. We'll see what happens here. But Dollar General will declare on Thursday before market open with an average move of about 7%. So this would give us, given that this is a stock that's priced right around $110, plenty of option strikes above and below price where we could bracket this with an Iron Condor and sell that premium and look for the stock to move very little through the earnings announcement. All right. Now we're going to close out the week, I bet, with a TD. This is a TD Ameritrade or TD that will declare on Thursday, December 4th, before market open. The average move here for TD is about 4%. Okay. The stock did show quite a bit of volatility last time, but as you can see, it gapped higher and then sold off the rest of the day, closing down. All right. But realize that my scaling here on the chart, that looks like a huge volatile move. But my scaling here is in $1 increments. If I condense that down to even let's say $5, not even $2.50, but $5, you can see that this really is a quiet stock overall. It going from one $5 level to another takes a couple of months. All right, it doesn't happen in a day or two. It takes a while for it to move $5. All right, and so earnings, we would expect that $3 or $4 move going through earnings, and that's about it. All right. Okay, so that is our quiet list for the week, and that brings us over to everybody's favorite, and this would be the really volatile ones. Okay, the breakout stocks. Now, for breakout stocks, we do something a little different. We use Straddles and Strangles is our strategy here for these breakout ones. We are looking for sharp, sudden movements in this underlying stock. Yes, implied volatility is usually elevated, making these more expensive. But what we are looking for is an edge. We'll say when market makers are pricing something to move 10% and its history moves 14 or 15%, those are good opportunities. Okay. A good example of that is Akamai. All right. Now, Akamai does not have earnings this week, but it is an example of a stock that moves regularly through the earnings announcements. Each and every earnings announcement comes with either a pop or a drop in the stock. And that's why Akamai is one that we like to trade in and around its earnings date. Okay. You see the last earnings date here was November 7th. Okay. And you can see the big spike there on the chart. So they will have earnings about 90 days from November 7th. Okay. So we're looking at getting into 2026 before they have earnings again. So for this week, let's take a look at our list. Now, there are some stocks that I do like to trade that did not make the list. Remember, this is not all inclusive. There are, for example, there's about 85 companies that declare earnings this week, and we're only watching about 44 of them. Okay, only around 44 am I keeping an eye on, and even less make my list. We send this list out to our customers, our subscribers, each and every week. All right, and we're looking for these opportunities. So first on our list here, let's jump into it. You'll see we have MongoDB. Now, MongoDB is pretty historic mover. This thing will move on average of 20% plus. Okay, now they will declare today, Monday, the 1st of December, after market close. Now, this is a $325 stock. This trade is going to cost you, if you do a straddle or strangle, it's going to cost you around $4,000. So this is really recommended stock this expensive, really for traders that have accounts greater than $100,000. Okay, greater than $100,000. You could trade probably one contract and keep your risk low. Okay, if you have a $10,000 account, yes, you could still trade this, but now you're trading 40% of your account, and that's just too much risk. So when I say this is for a more expensive or a higher value account, it's only because we're looking at good risk management, trading less than 5% of our portfolio value in each and every trade. Okay. Now, so the average move here for Mongo is around 22%. I did check this morning. They were pricing in a move of 13%. So this is actually a good opportunity where the average move exceeds the current pricing, and that would be a good edge there. But it is an expensive stock. I would be very careful with that. Moving on through our list, we have Signet Jewelers. Now, Signet has historically been a pretty good candidate. They move around 12%. They will declare earnings on Tuesday, December 2nd, before market open. We are expecting, for some reason, they have started to quiet down here recently. I'd be very careful with Signet. While its average move is 12%, if they're pricing in the options at around 10 or 11%, that is still too close for a good opportunity. I'd be very careful with Signet just because volatility here recently has started to lessen through earnings, and that is something to watch. Now, what is a good stock to trade, or what could be a good stock to trade for a smaller account? Well, this would be Asana. This is just a $13 stock. Now, they have earnings tomorrow on Tuesday, December 2nd, after market close. But this stock has an average move of 24%. Yes, the last earnings announcement, you can see there was a little volatility. We call this whipsaw volatility, where it didn't really pan out to be profitable. But in the past, you can see this thing will drop down. This thing went from $19 to $15. That's a $4 move on a $19 stock. That's over 20% move on a $19 stock. Okay. That previous earnings announcement. That is what Asana usually does. Its historical average over the past year and a half, that's kind of what I look at, is around 24%. All right. So it is definitely one. I'd be careful if they're pricing in a 20% move. If they're pricing in a small double-digit move like 13 or 14%, I'd be much more willing to trade this than if it was expecting a move of, say, 20%. All right. So I'd be very careful with Asana. But this is where a smaller account could play, because the debit for this could be about maybe $300 for the Straddle or Strangle. I haven't priced that out yet today, but that's usually where it might be, around $200, maybe $300 for the Straddle or Strangle on a stock like Asana. Now, another one, a good one to trade might be American Eagle Outfitters. Okay. Again, this is a candidate for a Straddle or Strangle. Now, as you can see, this stock has been pretty volatile here lately, and it has run lately from $14 to $20. It's made a $6 move in a little over a month and a half. All right. This stock usually moves about 14%. Now, American Eagle Outfitters will declare earnings tomorrow on Tuesday, December 2nd, after market close. The average move here is about 14%. And part of the reason I included them here is because of what Kohl's did last week, of what I'm trying to remember a couple of the other retailers that declared earnings. Maybe it was Urban Outfitters that declared last week, and those two stocks really moved. Yeah, it was Urban Outfitters that had a move of over 13%. So, this would be a good stock to trade for a smaller account. But again, watch what the market makers are pricing in versus its average historic move. I'd want to get in a move of 10% or less. Now, how do you know? Well, this is a good reason to be a subscriber, is because I calculate all that for you, and I actually teach you how to calculate what the estimated move is, along with what the expected and average moves are. And that is the value of being a subscriber over at ewotrader.com. So keep that in mind. Going through our list here, we have another inexpensive stock. Usually don't see many of these on our list that are valued in the low teens or the 20s that we trade. So this stock, C3 AI, will declare its earnings on Wednesday, December 3rd, after market close. And the average move here is 13%. Now, you could guess, usually something with the name AI in it is probably going to be pretty volatile. And this stock has been. You can see here the last earnings announcement, this big gap down. I mean, that is a huge move for the stock. The previous earnings, look at this, stock ended the day before earnings at a low of around $23. And then the next day, look at the wick on that candle there, though. I mean, it traded up as high as $30. So it literally went from $23 to $30, $7 higher before selling off and closing higher by at $27.80. Okay, so this stock can tend to be a pretty big mover, and it will definitely be something that we want to watch. So it moves on average around 13%, and again, good for a straddle or strangle, and good for a smaller account. All right, good for a smaller account. Now back to the big account candidates. Moving on through the week, we have Snowflake. They will have earnings on Wednesday, December 3rd. Wednesday, December 3rd, after market close. The average move here is 19%. Okay, big potential mover for this company. It is a $250 stock, so you're going to be spending around $3,000 or $4,000 on the straddle or strangle. You got to be very careful with these stocks, and really only appropriate for accounts upwards of $100,000 or more for this particular stock. We call this a high value stock. All right. And high value because you do need a higher value portfolio to trade them. All right. Now, Dollar Tree, interesting. Dollar General is on our quiet list, but Dollar Tree is on our breakout list. Why? Because, well, Dollar Tree has an average move of 11% through earnings, and they will declare results on Wednesday, December 3rd, before market open. Okay. This stock has caught a bid here the past couple of days and is rallying higher. So that usually can mean it's a difficult call when it's a better situation. Let me put it this way. It's a better situation when a stock consolidates going into the earnings announcement. Then you expect a big pop. Stocks that already start moving around tend to be a little bit more risky. So I would watch out for Dollar Tree, but we could still see some volatility coming out after the announcement. As again, what's their outlook for the end of the year? What's the outlook for the foreseeable future? Could cause it some volatility here. All right. Now, a cute one for the kids, if you want to do one, is Build-A-Bear Workshops. They will have earnings on Thursday, December 4th, before market open. The average move here for Build-A-Bear is 21%. Yes, the bear is a little volatile. 21% is the average move here. This is a $53 stock, so probably appropriate for all accounts. But this stock does show a bit of volatility through earnings. And again, we'll declare the results on Thursday. Wednesday and Thursday especially are big days. But Thursday especially, we have DocuSign. They will declare Thursday, December 4th, after market close. This is a classic mover. It moves on average about 19%. Okay. And again, that's plus minus. It might move 17%. It might move 21%. All right. So it's, things happen in trading, but this stock can be a mover, and it is definitely one I'm going to watch and price those options going into. And if I see my debit is around $6, maybe, $600, which would be a 10%. Oh man, I'm all over this, because if it estimates a move being 10% and the historic average is 19%, that's where you can see a big pop in the profit margin of your account. Okay. All right. Just two more closing out the week. We have Rubrik. They will declare on Thursday, December 4th, after market close. This is a roughly $70 stock, but it moves around 23% through earnings. It is a big mover. You can see that this stock, man, it will take it, it will pop and it will drop. This stock, previous earnings, it closed at 98.50, and then it declared earnings and closed the next day at 80.72. Okay. So you go from 98.50 to 80.72 in one day. That'll get your attention. Okay. And that is the type of volatility we could see with this particular stock currently trading at around $68. All right. And then we're going to close out the week with one stock declaring earnings on Friday, and that is Victoria's Secret. They will declare on Friday morning, Friday, December 5th, before market open. The average move here is about 12%. Now, you can see they've already started to move. They've gone from roughly $34 to $43 in just a week. Okay, so a little bit of volatility going into earnings. And with the way the other retailers have been trading, I would definitely price this out going into that announcement on Friday. Seeing, it should cost you about $4, possibly maybe less. I would hope for less, but they're expecting a 12% move, which could be, roughly, $4 to $6 on the move. All right. So this thing does tend to move around. Let me see if I can find, I don't have that other, this would be earnings right here. Okay. Nice little pop there back in May. I don't know where August, that might have been their earnings announcement in August, but they are, the average here for Victoria's Secret is 12%. And I would definitely be watching that as the retailers have gotten very, very volatile here lately. All right. So that is our list for this week. We'll pop up the whole entire list once more. And you can see, once again, it's not all inclusive. I highlight the best opportunities as of the time of writing. Things do change during the week and other opportunities appear and disappear. All right. But at the time of the writing going into the week, these were the best opportunities for not only breakout stocks, which appear on the left, but also quiet stocks that appear on the right. All right. So that is it as we go into the first week of December. But that takes us to our trades. All right. Now, if you like what you're hearing here and you like these opportunities and how we use options to profit from stocks that have earnings, please like and subscribe and allow this to get out to other investors and traders like yourselves. All right. We would really appreciate that. And let's get into our trade from 2 weeks ago. Okay. Because we did a trade that expired in about 10 days. With that was Walmart. Let's take a look and see how we did on Walmart. This was an Iron Condor that we did on Walmart. And Walmart had earnings, and it was the pop that didn't really hurt us. It was the subsequent 3-day rally right before expiration that had us trading out of this. Now, what's interesting, remember, with an Iron Condor, you're selling a call spread on top, you're selling a put spread on bottom. But as you see here, the stock tested the calls as it rallied higher. And we can close out of those early, which is what we did. And we could leave the put spread that we received a credit on it. We could just let that expire worthless because the stock can't be in two places at the same time. So here it rallied higher, was challenging our call spread. We took that off and locked in a modest $76 profit. Now, before you say $76, what is that? Well, remember, this is based upon a $10,000 account. All right. So that is 76 basis points positive return on portfolio in just under 2 weeks. Okay. If you annualize that over even a full month, that would be 1.5% return on portfolio for the month. Which you annualize that out, now you're looking at 13, 14% return on portfolio. For a trade, you really didn't have to do much. Just look at it occasionally. And then if it starts challenging one side, just take that one side off. All right. But again, we look for these trades to generate at least 1% or more. And this one, unfortunately, was a little shy. But it's the trade that we did last week. Now, last week we didn't have a show, but we went ahead and published a trade because we do have a service that we do provide our customers. And we made sure that our customers got this alert. This was on Kohl's. Okay, this was a strangle where you buy a call and you buy a put at two different strike prices, but they expire on the same day. All right. And we were looking at Kohl's going into earnings and expecting a big move from Kohl's. And you can see there the black line of the risk graph. So you see the stock chart on the left, the risk graph on the right. And each time on the black line that it changes direction, there's a strike involved. Okay. So a call on top, a put on the bottom. And how did this trade do? Well, we were in this trade for just 2 days, went through the earnings announcement, and bang, you had a $177 return on investment in just 2 days. Yes, the risk that you took in the trade, which was about $350 for this particular trade, we had a profit of $570 in just 2 days. Does that sound a little better? That's a 5.7% return on portfolio in just 2 days. 5.7% return in just 2 days. So yes, these things do. Buying a straddle or strangle going into earnings, it can work and it does work. And these things just pop when they do. In fact, if you had held on to this for for even one more day, your returns would have been like $800. And then even one more day, look at the chart. Look at the chart of Kohl's. KSS is the symbol. Oh my gosh. But we were conservative. We saw the pop. We had just a short time to expiration. So we went ahead and took our profits. And it was a very nice $570 on about 300 and something change risk. That's 177% return in just 2 days. All right. So what do I have in store for you this week? Well, we're looking at the quiet side once again. High probability trade with CrowdStrike. Now we're over the past 6 earnings announcement, we're 5 wins and 1 loss with CrowdStrike. So that's a good track record here of selling premium going into the earnings announcement. Again, an Iron Condor is simply selling a call spread on top and buying a put spread on bottom, just making sure it's wide enough to make a respectable rate of return. Here, we're looking at making about a 35 to 40% return on risk in just a couple of days. And what we're looking for here is implied volatility elevating going into that earnings announcement, selling the Iron Condor, and then seeing that drop. That IV will drop, that implied volatility will drop, and that is how we lock in our profit and hopefully can allow this trade to expire worthless and keep the entire credit that we receive for selling the Iron Condor. All right, that is our show for this week. Each and every week, we do give you the best available stocks to trade. So that is why you want to come back each and every week right here on Earnings Call. And I appreciate each and every one of you. So have a great trading week. Hope you had a nice holiday. Thanksgiving was last week, and now we are into the month of December and trading all earnings that come our way. So everyone have a great trading week, and I will talk to you again soon.